And so I'm actually so grateful to be here with all of you. So I will share my screen and that just, get us started on this. And everyone can see this, correct? Yes. And now just to do view. How do I do the presentation mode? I feel like it was here. Sorry, I have multiple screens, so it's always tricky, but you all can see this, correct? Yes?
Correct.
Perfect. Thank you. All right. So the reason I even entitled this Understanding Latino Wealth is that the topic can really be examined and studied from so many different angles. Even like the definition in and of itself, sometimes when talking about wealth, people are talking about finances and explicit assets. Other times, folks are just talking about richness. Or think wealth, they think rich people, rich communities, and wealth too, also in terms of like resources, and whatnot. Oh, hold on, you guys can see my notes. How do you? Well, it's fine. I was like, there's nothing I'm gonna hide on this, so you can see the notes as well on display settings. Oh, thank you. Swap presenter view, duplicate slideshow. How about here?
Yes, that works perfect.
This is the one. Okay, yeah. Sorry about that. I have multiple
No
screens.
worries.
And I'm like, I never know which one it is. I really appreciate the super active chat. Right. So just to get us back on track, the point is you can really examine this from so many different angles. And so that's why I think for me, it's key is just like, I'm going to provide one lens, one perspective. There are so many different others, and then also different ways to even approach the topic head on, because it also can be just incredibly abstract too. For purposes of this conversation, I do want to get into definitions and just to kind of level set and get us all talking about the same topic from the same place. Because usually, like I said, wealth, everyone's kind of like talking about it at different angles. But then also when it's so abstract, it almost feels like impossible to try to approach it in terms of like, how do you help communities either build more wealth or on the other end, close specific racial and ethnic wealth gaps? And so when we're talking about wealth today, we're talking about, sometimes people use the term net worth. But really in the most simplistic terms, it's wealth is what you own minus what you owe. So assets minus debt or liabilities. Sometimes people use the word liabilities. So example assets, oftentimes when we talk about wealth building, especially for Latino communities, the first topic that always comes to mind is home ownership. But there are so many other different asset types too. So that's not to say that home ownership isn't important, but it is just one component of this whole other like portfolio that makes up your wealth or your net worth. And so there's also checking or savings accounts as an example asset. There's rental property equity. So if you own rental property, you have equity in that. You have equity in your business, equity in motor vehicles, retirement accounts, stocks, bonds, and mutual funds. But something that's not often discussed is on the other side of this net worth equation, which is debt. There's credit card debt, medical debt, student loan debt, installment loans, loans from family and friends, mortgage debt, and vehicle debt. Some people talk about debt too in terms of secured debt, such that it's like debt like that's backed by collateral, or unsecured debt, which is not. I also think that it's important to distinguish between good debt versus bad debt. Like good debt can enable you to maybe build wealth, such as say like a mortgage loan, but bad debt actually, if not only does not help you build wealth, but can actually put you further into debt or in a financially precarious situation. And so like even within these topics, there is so much to examine. Like if you wanted to start to study specific asset types or specific debt types, if you wanted to see how it impacts different communities, there's so much within that. But this is just purely to kind of level set us when we're talking about wealth. We can really be talking about all of these different things, not one thing. The other thing that I wanted to point out too is why it's important to also, when we're talking about wealth, is that oftentimes we're using different data sets to even explain like wealth, where it's at, wealth gaps specifically. So oftentimes a lot of the language that is used right now is in reference to like racial or ethnic wealth gaps. It's important to note that there's a difference between a median net worth and a mean net worth. And so here on the screen, you will see examples of both median and mean wealth. And you can very clearly see like white wealth, whether it's in median or in mean format, like it far exceeds that of Latino households. And so one important thing, and this is from the data set Survey of Consumer Finances, is that not only, does the net worth differ whether you're using median or mean, it'll also differ in terms of the data set that you use. So Survey of Consumer Finances is one, but there's also the panel study of income dynamics, and then there's the Survey of Income and Program Participation, SIP. In terms of the Survey of Consumer Finances, I think what this basically shows is that a typical white household, if we're talking about median, a typical white household has about 5 times the amount of wealth as Hispanic or Latino households. So that is a pretty massive gap. But before we get into solutions, or at least thinking about how do we address these wealth gaps, I also want to point out too that one amazing thing about being Latino is, we have such diversity within the Latino community, not only racial diversity, but also diversity in terms of immigration status, generational differences, there's regional differences. And so you can examine and understand Latino wealth from also those different angles, like, immigration status, like what role does that play in terms of impacting your ability to build wealth? That's a huge factor in terms of the types of jobs that you have access to. And those jobs then determine the types of retirement assets that you're able to build. And so all of those component parts also play a factor. And one part too, in terms of our diversity, is that we also differ in terms of national origin. And so you kind of look at these different perspectives too, in terms of like, there's Latino wealth, which that's also viewing the community as a monolith. And so when you start to dig through the diversity of the community, you also start to see disparities even within Latino communities. So like Mexican wealth is very different than Puerto Rican, Cuban, Salvadoran wealth, and Dominican wealth, and so on. There's also differences between native-born Mexicans and foreign-born Mexicans. Like, this is just one example, but this is meant to highlight that there, again, when we're talking about Latino wealth, a lot of the studies and the data that we presently have has, for the most part, mostly examined the community as a monolith. A lot of my work really aims to kind of untangle a lot of these points to show like why the diversity really does matter, and showing at least that Latinos are very much coming from different starting points. There are some communities that, have been in the United States for generations, and, their experience or their reception in the United States has impacted their ability to build wealth. There are people that are also just recently arriving. The migration, the timing of your migration will matter. The context by which you immigrated mattered in terms of like, did you come from a family with a higher socioeconomic status upon entry? When you came to the United States, was your family received positively or negatively? There actually are some stories where some Latino immigrant groups, like Cuban Americans, for example, had a lot of federal support, depending, like in the post-60s, by the federal government. They were able to receive a lot of like federal subsidies to, get job training, education training, all sorts of things that enabled them to build wealth. Whereas that actually changed over time for different waves of Cuban immigrants. And that's very different than, say, like a Puerto Rican Latino experience. They are not immigrants, they are citizens. But what was their reception in the United States when they left the island? On the stateside, where did they go to? Like New York. New York is really expensive. What opportunities did they have for upward mobility? So all of that context really does matter. And my goal to just show you this is that while we talk about Latinos as a whole, it gives you really quality and important national data, it's also important to dig through also the diversity of the community, which is very rich in and of itself. And by rich, I'm not saying like wealth rich, asset rich, which we're trying to get our communities to those places, but I am saying like culturally, very rich, very diverse. There's so much beauty in the Latino community. So here though, I want to get to this other point is it's important to understand too that diversity to show like, okay, we come from different backgrounds, different starting points. But we also, I think it's important to show that there are so many instances too, where Latinos can do everything right. They can go get a bachelor's degree, and they will still have less wealth than a white household with just a high school degree. So this is what this data shows. And I feel like the Hispanic graph is the red one. And you can quite like see it, where they're at in terms of the thousands of dollars. Latinos with a bachelor's degree still have less than white households. And so that is meant to show too that a lot of times, a lot of the solutions focus on individual behaviors. Well, like saying like, well, if Latinos just got more education or more training, or if they learned this or learned that, or did this or did that. Yes, those things are important. Education is important, but this kind of shows that even if you do that, you're still behind. So that shows us that there are also structural components that need to be addressed, either, systemic structural barriers in the public sector or the private sector. There's discriminatory barriers, segregation has an impact. There's also a lot of important historical context. For example, when you think about policies that took place generations ago that enabled white households to build wealth while excluding Black and Latino households, that meant that white households were able to buy houses, start businesses, go to college for cheap or for free, or like very lower cost. And then they were enabled to build wealth that they could pass down generations. And that intergenerational transmission of wealth is a big contributor to the wealth gap, because you had whole communities, Black and Latino communities, that were excluded from that wealth building. And so they have a very different starting point in terms of wealth building. They don't have wealth that they can pass down. And the way that shows up often is in, when your parents, like some white households have had parents be able to, pay for their kids' college or pay for the down payment in a home. That's how that type of transmission of wealth stands out, because for the most part, Black and Latino households don't necessarily have that yet, at least in mass, at the same levels as white households, and they're slowly building up to that. And I share that to say, again, just to highlight that that historical context matters, but also when we're talking about solutions, the systemic and policy solutions also matter. And so here are a lot of numbers. I pulled some out. These are actually in a report that I'll link to later. And so that's just to kind of just show you too, this is actually using the SIP data, which is the Survey of Income and Program Participation, which is why you'll see differences from the Survey of Consumer Finances. But my point is to show that when we also talk about wealth, a lot of the differences are based on differences between asset types. So, when we think about wealth caps, I have heard in a lot of conversations, people think, oh, well, Black and Latino communities might just have more debt. That's probably why. And like in certain cases, there are certain debt that Latino and Black households hold more of. Like think of like student loan debt. I think in more recent years, we've actually started to see an uptick in credit card debt, which, that's a little bit alarming. But for the most part, Latinos don't have that much debt in terms of like enough debt to be the driver of a lot of the wealth gaps. If anything, there's just such differences in terms of the assets, not only in terms of the percent holding of the assets, so the number of people holding assets, but also in the value of the assets. And so when you start to think about building wealth, there are ways to maybe consider approaching this methodically. How do we increase the number or the share, the percent holding assets, the share of Latinos that hold stocks and mutual funds, the share of Latinos that own equity in their home, that own retirement accounts? So that's one goal. The other piece is, then studying the value. Who decides value? How is value decided? Especially with home ownership, for example, you have appraisals. There's some research that shows that sometimes appraisals can be discriminatory, where Latino home values get underappreciated. What does that mean? So that's a policy area. But there's also all of these other areas where we could be actually working on increasing the median value of those assets. So that's what the goal was, to just show you this. I'll link to the report at the end and highlight it for you all, so you can see the bigger picture numbers. And we actually show too the comparison between not just white and Hispanic households or Latino households, but also Black households. And at least at the national level, what you end up seeing is like Latinos kind of always fall somewhere in the middle between white and Black households, be it in the median value of the assets or in percent holding. And again, like I said, you can't talk about wealth without talking about debt as well. I think assets, of course, are always going to be a central part of the equation. But I think one area that we really need to start paying attention to from a policy and research perspective is debt. Especially because, at least what we're starting to see nationally is that when communities don't have federal investments, a lot of times what you end up seeing is then an accumulation of debt to pay for the things that you would typically have subsidized or that other households have had subsidized. So a big example of that is student loan debt. In the past, when education, was cheaper because government was subsidizing a big portion of it or providing more scholarships or funds for people to go to college, it wasn't as expensive to go. But now more households are having to accrue the debt because you have less of those like federal subsidies. With credit card debt, what we actually start seeing in research is that because a lot of I would say like insurance and supports are being taken away in the workforce or for jobs, so that income and job stability that we see means that, when people have more variable income, they need to rely on other sources to take care of basic needs. So that's where you're starting to see an uptick in credit card. And what I mean by like the job and income instability is, I don't know if anybody has noticed, but more recently you start to see more jobs that, label people as, say, independent contractors. You have a lot more Uber drivers. You have a lot more delivery service folks for like DoorDash or Uber Eats or all of these different companies, Grubhub. A lot of those jobs don't come with insurance, be it health insurance or other types of benefits. I know people need to make ends meet, but from a policy perspective, that means then they have to figure out how to pay for these things in other ways. And so when their income is more variable, they're living in a more precarious situation. When hard times come, they need to rely on credit products, which then increase their debt. So that's where you start to see credit card debt. If you don't have health insurance because your job doesn't provide you with types of benefits, you start to accrue medical debt. Like all of these things add up. And that's why it's really important to always examine debt when you're looking at wealth, even including from a policy perspective. And we should continue to monitor this closely. Now, getting away from numbers because it's a Friday, I want us to also think about examining the context behind the numbers. I think this space, more than most, will probably know more of this context because you deal with more Latinos that are dealing with their finances and thinking about their financial situation. But I think one narrative that I've seen, at least in my work nationally, either from non-Latinos or Latinos, is there's a lot of either subtle or overt like blame placed on Latinos, like, oh, the reason Latinos aren't building wealth is honestly like it implies there's something wrong with Latinos. And a lot of my work just really aims to dispel a lot of that. And what I mean by either like overt or subtle is like, it's like, oh, it's because they don't value education, or they don't value knowing these things, or they don't try hard, or you name it, people will say it either subtly or overtly. And what I try to show is like, actually, if you talk to people, you can actually find that if anything, they're really good with their finances. It's just that they don't make enough. And so they're trying to stretch a dollar to do all sorts of things. And so for me, that's more of an issue of policy decisions to increase wages, to create more job security, to create more benefits so that people can save to do the things that enable wealth building. It also means looking at history. why is it that some households were able to build wealth versus our households? So instead of blaming an individual, are there things that have allowed other households to build wealth? There's nothing unique about Latinos that prevents them from building wealth. It's more so that there is this larger context in society. And so when I talk about examining context, it's really just what I mean is ask questions versus passing judgment or imposing blame on an individual. Consider systemic barriers, including public sector and private sector barriers. And this also gets to a lot of like the language around solutions. Oftentimes the first solutions are what the individual can do, but the onus also needs to fall on the public sector, the private sector. What can banks do to make sure that they are more accessible? What can the public sector do to ensure that policies are supporting the needs of the most vulnerable? And then the last piece, of course, and this is all tied, is really study history. History has actually helped me understand the way that even regional diversity matters for Latinos. Latinos had, in some cases, opportunities for wealth building. In a lot of other cases, they were prevented, oftentimes through discrimination. And so fighting back against that is important, but you need to understand the context to then develop the types of solutions that enable you to tackle such a complex problem. And so just kind of getting into like the history piece, on the one side of the graph, you see kind of like these bar graphs increasing. What basically it shows is the Latino population in the United States and how it starts to really take off in the post-1970s. It just grew dramatically. And so from a historical perspective, what this means is, you had populations that were excluded, let's say, between the 1930s and 1960s. So that's when Black Latino households weren't able to take advantage, at least in mass, for like a lot of the federal investments or policies to like buy a house, for example. And then they couldn't pass down that wealth. Well, what happens after the 1960s, you start to see great things like the Great Society programs, which enabled more of that social safety net to appear. But around the 80s is when you start to see actually a transformation of policies. And so that's when you start to see maybe like the big banks leave communities, and in their place, you start to see check cashing services emerge, payday lenders emerge, title loans emerge. Like they actually expanded in mass in the 80s and 90s. And what also this coincides with, that's what this graph shows, is when the Latino population also happened to increase. So all that to say, why this historical context matters is like, here you have whole generations of Latinos, especially larger part of Latinos, who were probably raised in communities where they didn't have access to traditional financial institutions, unless it was in the name of, say, like smaller banks, other types of I guess it would be like credit unions. And so like that's where I'm saying, like, especially for this audience to like think about, it's like this is actually why these things are needed, is like many generations of Latinos were brought up without actual access to a lot of the same things that other households had been traditionally able to access. And so that's just one perspective. That's just to show like why history can kind of give you some more of that backstory. The other one also is talking to communities. So one of the projects I'm currently working on, it's a report where we had a bunch of community conversations in 6 states. It was Illinois, Texas, California, North Carolina, Florida, and New York. And our goal was just to talk to community members about their wealth building barriers, opportunities, what they see as potential policy solutions. And that's kind of where also like talking directly to people in the present can just be really, really helpful to provide, again, the context behind the numbers. Because when you look at a data set, you're just kind of like, oh, okay, this could mean this, it could mean that. But talking to people kind of at least helps to paint a picture. And so some of the things that we were seeing, for example, is not the case for all households, but for some, a lot of households aren't able to even focus on building wealth yet because they are mostly preoccupied with getting economic stability first. And so that's kind of where it's been helpful for us to start to identify what are the types of policies that enable people to have more stable income, more stable jobs, more stable benefits associated with their jobs. And that's kind of where then a lot of the area of focus for policies might be helpful, because like I said, when you don't have stable income or stable like jobs, you start to resort to more debt products in times of emergencies. The other one too, yeah, no, I appreciate this comment. I am not at all saying credit unions are to be confused with predatory check cashers, or I actually believe credit unions are part of the solution. Because when you had big banks leave, and when I talk about big banks, I'm talking about the big conglomerates right now. When a lot of those started merging, they got bigger, they started leaving a lot of communities of color. In their place, you start to see predatory products, check cashers, auto title loans. And so that's where, you know, you want to give people alternatives to those. You don't want them to just have access to predatory financial institutions. You want things like credit unions that actually meet the needs of communities, especially if the institutions won't do it and you only have access to these other alternatives. And so all that to say then, like, again, like the community conversations helped us also point out that, yeah, thank you, Heidi. No, I appreciate it. I was like, I'm glad you comment that. I did not want to make that have that be misunderstood. No, I do think credit unions are really important, especially for communities that don't have access to financial institutions. So anyway, the other piece I was going to say too is a lot of communities talked about limited credit options available to them. And like, they were super, like, as much as people say, it's like, oh, you know, financial literacy, people don't know. And I'm like, and some, sure. I think it's really important to distinguish between financial information networks and financial literacy. Sometimes what it is people don't have access to the information itself. And by information, I'm saying quality information. But once they have it, like, for the most part, like, people are pretty good about budgeting, not trying to get into like debt as much as they want to look for safe products and services. Like, that's what they often need access to, is like, what is a safe low interest product that I can use? And that showed up again and again. And then again, like the preference to avoid debt if possible, but understanding that at least in the United States, like, credit and debt are very much intertwined. Like, you need credit for a lot of reasons, but you want to avoid debt. And so this is where it gets to be really interesting and complicated. And so we want to make sure that we're getting like good credit options available to them, so that when they're accruing debt, it doesn't, you know, end up hurting them. And then the last piece too is this interesting connection between intergenerational wealth transfers and retirement. I talked a little bit about why transferring wealth becomes super important from one generation to the next. One interesting thing that kept coming up in our conversations was that a lot of young people, especially upwardly mobile professionals, are the ones supporting their parents. So it's not parents passing down wealth as much as a lot of times the kids are expected to be like part of the retirement plan almost. And so from a policy perspective, what this tells me is we actually need to be supporting more Latinos, including immigrants, to be able to have access to retirement accounts so that that doesn't fall necessarily on the child. And then for the children that are supporting adults, that are supporting family members, either here or abroad, because we do know that that happens a lot and that kept coming up a lot. Are there ways that we could expand subsidies or tax credits to actually honor this? And I just kind of give an example, like when you think about like philanthropy, you know, we have these tax breaks or credits for like charitable giving, but that tends to like impact wealthier households. But to me, supporting your family is another form of really important philanthropy. And yet we don't honor it in our tax code in the same way. So all that to say is, like, when you find these insights from communities, the first thing I start to think about, what are the policy solutions to alleviate what a lot of families are experiencing? And this gets me to this last or piece before kind of just talking briefly about policy solutions, which is oftentimes, again, like when you talk about wealth, people immediately start to get to solutions like, well, and say like, oh, well, it's this or it's that, this is what's needed. It's like, okay, first we need to understand the problem, and we need to understand if there is a problem first. And then once you identify, yes, there's a problem, this is the problem, then you have to start to understand then what is the goal. And so that's kind of why I walked everyone through like why it's such a complicated topic for Latinos. Is like, are we approaching it from like a monolithic perspective? Are we approaching the solution from a regional perspective, a national perspective? Are we approaching it from an immigration perspective? All of it. What is it, the lens that we're approaching this through? Are we approaching it by specific assets or debt types? And then once you have that kind of like at least the scope that you're dealing with, then you start to examine what is the context then behind the numbers and the data that we do have. And then from there, you can start to identify some goals. So like I was kind of talking a little bit about what we were starting to see in terms of like the community conversations, you know, some example goals could be like, we can address wealth disparities with policies at all levels of government that can help families or individuals. One, build assets or increase human capital. So we started to see in the data that there are clear disparities in terms of the assets. And so we want to help Latinos build assets. And so policy solutions should be designed to address that side. The other piece is reduce or eliminate debt. And then the other piece could be like we were talking about, like start to address the intergenerational transfer of wealth. The other one is access to information networks. And then the last one, which I've talked a lot about today, which is achieving the income and job stability, because that will tie into all of the other goals. And especially for families that can't quite focus on wealth building, like the bare minimum, we need to create that kind of safety net for those families to have that type of stability. And so once you get to the goals, that's when you can start to narrow types of policies. This is all a draft, so don't judge me for any of these. These are not done, but it's more to kind of show you all like how you would organize something like this to say like, the goal is XYZ. You know, I want to either build an asset, help families build assets. I want to help them reduce debt, transfer intergenerational wealth, etc. And then you start to identify the types of policies that can help address those goals. And you can do it at different government levels. Because sometimes a lot of the policies are really like, it's going to be a federal effort. And that's where different localities need to organize to push for those types of policies that will help families. Sometimes you can do really great work at the state level or even the local level. And the point is like, because wealth, again, can be so abstract and mean so many different things to people, it's really hard to then get specific with policy goals. And so my goal is kind of just like, we need to understand the topic, then understand the problems, the context of how we arrive here. And that's what will enable us to then identify the goals, our targets, and then the policies. And so for here, just to show, I am a fan of credit unions. I was like, we should support, you know, like bolster subsidies for credit unions. But I would love to hear also in this group too, because I said this is a draft, these are example policies. If you all have your own ideas in terms of like what could actually help credit unions better support the needs of Latino communities, especially because they do need access to financial institutions and those services that are safe for them. And so I actually sped through this, so I'm kind of happy because it'll leave us more time to discuss in case you have any questions. But I wanted to just highlight that a lot of this stuff was actually in my current or my upcoming report. So the report that has a lot of this asset and debt data and that talks about the importance of examining this topic through by honoring and centering the diversity of Latinos is this report called Understanding Latino Wealth to Address Disparities and Design Better Policies. I've also written other pieces on Latinos and the future of finance, why we need to examine the motivations and effects of Latino fintech adoption. So that one, if you're like, what, fintech, what is that about? I will say there is something that's happening and that we're starting to see more higher fintech adoption rates by Latinos. And while we don't have the data, and this is what I call for, we actually need to do more data to understand the motivations. What we have seen anecdotally is that when people do not have traditional avenues for building wealth or accessing services, they will go to alternatives. Now, in the past, those alternatives were payday lenders, check cashing services, title loans. But now a lot of it is coming in the form of fintech. Now, not to say that fintech's bad, but the point is it's not well studied. And some products and services can be good, and some can actually be really dangerous. They can often come with like high interest rates themselves, a lot of hidden fees. They're not quite regulated as well. And so this to me is alarming, and that's why it is tied, and we should be examining what's happening in terms of like, now there's all these alternatives that pop up in digital format, and we think that because it's tech, it must be safe, but that's not necessarily the case. And we always have to look at everything from, yes, the positive potential of everything, but also understand the risks and the drawbacks so that we can address them and ensure that consumers are protected and not harmed. And then lastly, I was going to say that I do have an upcoming report that I referenced a little bit, that it had community conversations, but we also look at assets across those different states. Again, they were Illinois, California, Texas, North Carolina, New York, and Florida, to look at how Latinos are faring in the different states. What we are seeing is it really matters. The regional diversity really matters. Some Latinos fare better than others. And depending on the state that they're at. And that also has to do with, again, historical context. It has to do with opportunities to build wealth, community networks, all of those things. And then it also has some of the insights from the community conversations, if you all want to dig deeper into those. So with that, I think I'm done with the presentation. Would love to open it up to any questions, or if you just want to chat, or if you have policy solutions, I am all ears.
I was trying to unmute. What a great presentation, Tanatin. We're opening the floor for some questions. So if you want to raise your virtual hand, if you have any questions. Let's see. Okay, I don't see any questions, but you made a very important point that I really wanted to discuss. So I'm gonna just open the floor for discussion, because you made a very important point. What could credit unions do in order to support access to financial services for the Hispanic and Latinx communities? So I'm just gonna open the floor for discussion on that.
Or what policies could support? That's the other one. I feel like if there's, especially, so my organization, we do research, but the idea is to inform policy. And so we talk to federal and state legislators all the time. If there are things that could support credit unions to better support the needs of Latino communities, what would it be? Is it grants? Is it, I don't know, some regulation? Oh, Alfredo has a question.
Yeah.
Or comment.
Hi, good morning. Well, afternoon for y'all. I believe it's good morning for us. I'm on the in California, Southern California to be specific. And I'm just kind of curious. Our credit union serves a large demographic of Latinos and Hispanics, and we're currently looking to build financial capability programs. So I'm just wondering from like a policy perspective, because that's something I have no idea about, is how could maybe from a policy perspective build frameworks to partner with credit unions to develop financial capability programs, so that way we can develop assets or asset building programs that steer away from the money service businesses that you called out, the payday lenders, the fintechs that sometimes are predatory in nature. That kind of framework and that perspective on the policy side would be super helpful. So we make sure that we're from a regulatory standpoint, because one of the things that I feel like often is holds projects back from a creating perspective is a compliance perspective. Are we following regulatory frameworks, things from that nature? So that's what I wanted to add. I'm not sure if you have heard of anything in the works, or if you in your personal experience have seen like, well, this is a great program, maybe we could take this to another level. But that's just what I wanted to share with the group.
Thank you so much, Alfredo. That's such a great comment. I will say I do not have the answer to that. However, this also opens it up for everybody else. Like I said, I do research on this. So if I don't have the answer and you're like, you know what, it would be really great if you did research on this and shared it with all of us, that's also what I'm open to. I think my goal is always like, how do I support the needs of the Latino communities? But I also, especially with like credit unions that are serving these communities, like if I can be helpful to you from a research perspective, I would love to do that. So this is a great area that I will look into further and get back to you when I have an answer. And who knows, it might make its way into a report.
Thank you.
Okay. Let me see. So Alice says, I think a lot of financial institutions and the people that work at them are unfamiliar with ITINs instead of social security numbers as a form of identification. I can't stress this enough because this is what, going back to what Tanantin was saying about, we are seeing the increase on fintechs. Because sometimes you go to a financial institution, you go to a credit union, you don't qualify for savings or a checking account just because of the fact that you don't have a social security number rather than an ITIN. So that makes you go to like these other fintechs like, Chime or Cash App or, or whatnot, with all this hidden fees and, all that. So I think that it's very important to, for a financial institution itself, including credit unions or banks, to provide the necessary training and information so all the employees, especially the ones in the front line, to become familiar with this several types of identifications.
Absolutely. Yeah, I will say so. Before I started as a researcher, one of my jobs, I worked at the city of Chicago and I ended up creating the city's municipal ID program. So it would enable all populations access to identification, including undocumented immigrants. And the whole idea to that too was like, could this ID be accepted at financial institutions, to allow them to open a bank account? And part of it is because like, with certain state IDs, like you do require like an SNN instead of an ITIN, and it is super complicated. But I will say some of our biggest partners and the ones that made banking more accessible were the credit unions, that they were like, you know what, in terms of different identification, we'll work for you or work with you to make it secondary identification. And then what we're also starting to see with them, which was great for us, we were able to get more immigrants who are able to like access certain products and services. Like it was like credit unions that enabled them to get access to products that were tailored to their needs. So if you don't have an SNN, then you start to get ITINs. I think like Minnesota, for example, has some more robust programs. I know Texas is working on some of those like loan products, especially to enable like home ownership and whatnot. So I really do appreciate the comment because it is something that I think like the bigger banks, and then just in general, a lot of financial institutions do not understand the difference, or at least are more unfamiliar with how to work with ITINs. Okay, I see more questions. What can credit unions do to build trust within Latino communities, and how should we advocate for cultural sensitivity training credit union wide? Oof. Oh, nice. I appreciate the comment on Minnesota. So in terms of building trust, ooh, that's a hard one. I will say, I think you just have to try and keep on trying. And I say this as somebody who worked in government, and building trust with the Latino community from a government perspective is hard. And one of the things that I think enabled me to do a lot of great work is like, I really did reflect on like, well, where does that distrust come from? And it is a really rational thing. If you have been harmed by certain institutions in the past, you're least likely to trust them. And so oftentimes, at least I've seen this more in government, is you'll see folks put the onus on the individual to reach out for that service, but it's really government that needs to be showing up constantly. And I think the same is the case for credit unions. They're not going to come if they distrust you, but that's not on them. That's on the credit unions. That's on financial institutions to keep on showing up. And that means providing information in their language in a culturally competent way. That means tailoring products to their needs and serving them. That means even partnering with trusted community-based organizations that maybe they have more access to. And like community nonprofits truly have been some of the biggest like helpers, at least when I'm trying to do work that like serves like Latino or immigrant communities. I work with trusted entities because if they don't trust me yet, they will trust my partners. And so those are just some ideas, but I appreciate the question, and that I know this group of all is probably the leading the way on a lot of this work. So I appreciate you and what you all do. Are there any other questions? I also really appreciate the comments in the chat. Yeah. Any other questions, thoughts, comments? I really appreciate it. Yeah, I'm learning a lot from all of you too, so I appreciate it. And that's how I think too, is like research, oftentimes we may seem we're not as accessible being at a think tank, but part of why I also wanted to do this presentation is that if I can ever be a resource to you, please don't hesitate to reach out. That's actually how this presentation even happened. I was doing a study on something else, and LCUP, like, folks reached out, and so here we are. And so I always extend the invitation to you all as well. I'll have other reports coming up, but also, like I said, if not here, if you think of something that you're like, this would be great if we had more research on this topic, send it my way and I can see if I can put it into the queue of like reports and research I'm working on.
And I just wanted to add one more thing, but I'm sorry, my neighbor is going crazy with his lawnmower, so I can unmute myself. But just an important point, right? Just to give you a little bit of a heads up, sneak peek. Knockup is getting ready to launch cultural training for frontline employees on how to serve Hispanic Latinx communities. We've been working on this project, and we think it's just very important for credit union folks at the front lines to just understand the culture itself, how to properly address people. I saw a comment in there because immigrants don't trust financial institutions, and we want to be able, within the credit union network, build that trust, provide products and services that our members can understand. Word of mouth is so important. I worked at the front lines for 5 years, and I could not stress enough how many times, like 8 out of 10 times, I'd be like, I'm here and I came to see you because so and so, recommended you, and it goes on and on and on and on and on. So, I think that the fact that you are here in this call and learning about all this, data that she has provided us is a step in the right direction. Partnering with nonprofit organizations like NALCA is a step in the right direction. So we are very, 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 and extremely grateful for all of you that made time out of your schedules to be here with us today.
Thank you. I see one hand raised. Catherine?
Yeah. Well, I just kind of what like Perla was saying and what you were saying, I feel like I really love that you pointed out like building that trust, or among mistrust is going to trusted community orgs and partners like that. Like, I cannot stress enough how impactful that can be. I used to work, it wasn't like financial, but it was in government, like health programs, and we needed to go out and like address mistrust in the like health community when it comes to government. And like the way that we did that was going out and finding partners, and even just like not just community organizations, but people that the community trusts, like those aunties or like those people that are just leaders, and getting them on board, and then having them be the ones to say, hey, this is a safe program. We know you're undocumented, but we're not, like, you can still come, you can still get help without like being afraid that you won't get in trouble. And I think like what Brandy's saying, like, how do we overcome that? I feel like in my experience, that's just time. It's taking the time to build that relationship with that community organization, and like going actively in the community. It's not like you go one time and say, hey, it's okay, like don't worry if you're undocumented, like you'll be fine. Like that's not enough. And there's like, if there's deep mistrust, it involves deep trust building.
Ooh,
But
I love that. Yes. I agree. I'm gonna use that line too, because it's, yes, that's exactly spot on. Thank you so much for your comment.
And I put it in the chat, but someone mentioned as well, just credit unions offering ITIN lending. You know, this can make such an impact. It provides immigrants a path to homeownership. It's a step closer into building wealth. Because at the end of the day, like someone can be an immigrant, someone can have an ITIN number, but that person is still working, that person is still paying taxes
Yes.
every year. So
Absolutely. Absolutely.
This is Christina Garza
Hi.
from North Park Community Credit Union. And I think Myra Navas, she's my coworker. And she's also saying something. We offering ITIN lending is very challenging because as you says, Perla, they work, they pay taxes, but it is very hard to explain all the discrepancies that you will find when you're dealing with an 18 holder. So I would like to, if someone is already working with ITIN lending, I would like to maybe hear how they are working these discrepancies.
Absolutely. Is there, I don't know if somebody on the call is, in general, the folks that I've talked to, I think I've talked to a gentleman in Minnesota, and I know Texas, there was like a Texas credit union that has been working on this right now, examining it. Like they started with a smaller pool and like we're expanding it, I think with like home ownership. Which if I find the contact, I'm happy to send it your way, Cristina. But I don't know if there's anyone on the call.
also, there's also the in glue up the NALCOP's community resource page. There's a ton of information in there regarding
Okay.
lending policies. Yeah,
Great.
from credit unions all across the United States.
Monica. Okay. And Myra, thank you.
Let's see, offers ITIN lending. I'm in research, but I can put you. Okay, I love that networking in the chat.
Perfect.
Oh, okay. Rolling out ITIN lending November 1st, including a home ownership. That's amazing. Alice, we can also accept alternative forms of credit for people without credit history, like showing us on-time rental payments, utilities, and other bills that are not captured on the credit report. Awesome. Love this. Love this. Let me see. And then we have, what's the best way you think we can open up this conversation with our members in credit unions? Being on the teller line, we face and interact with a lot of members, but I feel like predatory lending. Do you see Noelli's comment, Tanatu, on the?
Oh, okay. What's the best way you think we can open up this conversation with our members in credit? Well, this, like events like this, I'm like, if we can, on wealth, that's, I mean, like, I'm always happy to present. On the ITIN stuff, I think there should be maybe some like more sessions on the ITIN stuff. I don't know if it's like a partnership with NowCab. But then in terms of the predatory lending, oof, there's actually so many great organizations that work on like consumer protections and consumer advocacy. They have like some of the best research on predatory lending, the types of policies to like prevent some of this stuff, to cap certain rates and whatnot. Unfortunately, sometimes with these policies is like, if you address it one way, it shows up in another. And so I think as long as people don't feel that they have traditional avenues for accessing financial services or building wealth, like I said, they're going to seek alternatives. And so our goal should always be, how do we bolster what we know works? So I think credit unions, for example, are doing such great work. What do we do to support them? Like, I really feel like there needs to be more investments in credit unions such that they can do the work that they need to do to actually reach the communities that need it. So that in my world is like, from a policy perspective, like that's an area that I hope to kind of like bolster a little bit. But that's just a thought on the policy side. I know this could also be a question on the more like implementational tactical side on the ground. So if folks have other thoughts on that as well.
All right, everyone. So I think we are on time. So thank you everyone for joining up for sure. If you have any additional questions, feel free to send me an email. Putting my email in the chat. Okay. Thank you. Remember, we have one more session coming next Friday. So registration is still open. So we hope to see you. We hope to see you next Friday. Thank you, Donatien, for what a great presentation full of insights. So certainly appreciate your time, and I keep looking this other because I'm going between two screens.
No
I'm
worries.
sorry. Yeah. So thank you, everyone. Just remember, we have all these other great programs. Just join Cafecito con Cultura if you can. Full of insights, very educational club as well. And our few other programs that we're going to be launching soon. We had a lot of ITIN lending discussion. We are going to offer a workshop on that next year, so just stay tuned on dates on that. But yes, just feel free to email us if you have any questions. But I hope you have a great weekend. I hope you have a great Friday, and thank you again for all of you who are members of NACUP, and for those of you who aren't, I encourage you to join and continue to support our mission. So thank you, everyone. Have a great Friday.